Hey everyone, Nvidia stock investors got some big news when Nvidia reported that CEO Jensen Huang could potentially sell up to $735 million worth of Nvidia stock. Typically, these insider sales create some panic among Nvidia stock investors and investors of other companies where their insiders make sales. So I'll review these latest announcements and what it really means for investors. Is it a cause for panic? Should Nvidia stock investors sell now that the CEO is selling? I'll answer all of those concerns in this video, so let's get into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so here are the details. Nvidia's CEO, President Jensen Huang, expects to sell up to $735 million of Nvidia stock. This was disclosed in a regulatory filing that the CEO adopted on March 14th. It's the so-called 10b5-1 trading plan to sell up to 600,000 shares through March 31st of 2025. Now, these plans are automatically executed when present conditions are met. So, for instance, when a certain price is met at a certain volume, they just automatically make the sales on behalf of the CEO or the individual. So these are just planned sales to diversify holdings. You might say, well, if the CEO is selling, then that means the CEO feels like the shares are overvalued, and so the CEO is selling just to get rid of an overvalued asset. That would be a valid argument to make. However, I usually caution investors from making those judgments. Investors, CEO, managers, they often make purchases and sales for several reasons. One of the reasons could be that they feel the shares are overvalued. That's true. But there are other reasons to sell. For example, let's say you've got 95% of your family's wealth tied up in Nvidia stock. That's a very heavy concentration to have on just one asset. That's not an ideal wealth diversification strategy. You don't want to have all your wealth tied up in one asset, especially if it's a stock. Stocks are volatile, right? So it would be more prudent to diversify and sell some of that stock and put some of those assets into any other asset class, right? Anything else other than Nvidia stock, because you're too heavily weighted in Nvidia stock. That's too risky. So you don't want to have that much of your wealth tied into one asset. So that could be one reason, a valid reason why a CEO would sell. And given that company managers are very often paid stock-based compensation, they end up accumulating massive amounts of the asset, the stock of the company that they're working for. So you'll see these sales. And it's not just the CEO here, Jensen Huang, making the sale. There was additional disclosures for additional stock sales. One of the members of the management team, Mark Stevens, also is selling shares. Also, there was two big sales from Deborah Shokist on June 3rd and another big sale from Deborah Shokist on June 4th. So you're seeing multiple insider sales here from Nvidia, and it's not a coincidence that it's happening when the stock price has absolutely soared up to $1,200 per share. Many of these grants or stock options get exercised when certain price marks are hit, like we mentioned earlier. If it hits a certain price, then it triggers the sale, or if it hits a certain price, then it triggers the release of certain options to these managers. And so as prices rise like this, you'll see these announcements of big sales. So this is not uncommon. This happens quite frequently. The point being, it's no reason to panic. It's no reason to feel like you should sell your shares too, right? And I make the argument the same way as I would on the other side of the equation. There are many reasons why investors and managers and CEOs and popular individuals make purchases of investments. one of the reasons, sure, it could be that they feel the price is undervalued, but there are many other strategic reasons why CEOs and CFOs and popular investment managers make purchases of stock. So I always caution my viewers against making any decisions based on a decision that someone else made. Right? Just because someone else is buying or selling a stock doesn't mean you should be buying or selling that stock. It's just one more data point to consider in your overall evaluation of a company and its prospects and your overall due diligence. It should be a small factor in your overall due diligence. More importantly, I would focus on the company's revenue growth, its profitability, its cash flow, its competitive advantages, its prospects over the next few years, the industry prospects, all of which I would weigh more heavily than what's going on with some individual who is buying or selling, regardless of the individual, their ranking, and their position. Now, it does play a role in my decision making, but I admittedly have it play a very small role in my decision making because, like I mentioned, there's many reasons they could be buying or selling, and I'm not going to allow that to influence my decision making. So don't panic here. I wouldn't panic. The factors that I mentioned earlier, Nvidia's revenue is soaring. Its profit margin is exploding. The prospects for its products are excellent. The industry it operates in is thriving. All of that is going in the right direction. And while Nvidia's stock price might be exploding, Nvidia is still trading at a relatively bargain valuation because the increase in stock price has been justified by an increase in earnings per share. I gave an example at my university course last week that you could be going to the market and you see a 20-ounce bottle of orange juice selling for $1. And the next week you come back and you see that orange juice is now selling for $3. But instead of it having just 20 ounces, you're now getting 100 ounces of orange juice. So sure, the price increased, but what you're getting also increased by 5x. So you're getting a lot more. The price increased, but you're getting a lot more. You're willing to pay a higher price because you're getting a lot more in return. And what you're getting in return increased by more than the price increased. And that's the case with Nvidia. The price increased, right? It's tripled in the last year and a half or so. But what you're getting also increased by much more than that. The revenue, the profit, the cash flow also increased by much more than the stock price. So the valuation, what you're getting in return, is still attractive. And that's why I've kept Nvidia as one of my top 25 stocks to buy. It's been on my list all year long, and I've continued reiterating that recommendation. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.